Hey, what's up, my friend? So in today's video, I'll share with you, right, practical strategies and techniques, right, that you can use to identify trend reversal in the markets. I know, right, often most of you are thinking of buying maybe a stock or trying to go long, and the market has moved up so much already. And when the pullback comes, right, you're wondering, is this for real? Is this a pullback, or is this the reversal of the trend? Okay, so I'm going to share with you three things, right, that you can pay attention to look for, right, to help you identify trend reversal in the market. The first thing that I want to share with you is what I call the break of structure. So think about this, right? In a trending market, let's say an uptrend, you know the price makes a series of higher highs and higher lows, right? You can see over here, right? Higher lows and higher highs. So what do I mean by a break of structure? So the break of structure means, right, that the first clue that the market is telling you that it's about to it's weak, right, or it's about to reverse is when you have a break of structure where the price makes a new lower low and lower high. So in this case, right, this over here you have a lower high and a lower low. So this let me just redo this, right? This is not a very good example. So redoing it, right? So uptrend, okay, market breaks down, pulls back, and then continue lower. So now you have a lower low and a lower high. This lower high is below this lower high over here. So this, right, is the first clue to you that the market, right, is about to reverse lower. It's no guarantee, right, but it's a clue given to you by the market that, hey, there is a break of structure. The price could potentially reverse lower. So let me share with you a few examples, right? So this is the Bitcoin, right? You can, if you are aware, right, in 2017, Bitcoin had this meteoric rise, right, to 20,000, right? People are buying, right, going long, and you can see this strong parabolic move higher. So now, at what point, right, would you be alert, right, that, hey, this trend is about to reverse? Again, the concept I just shared with you, right? An uptrend, higher highs and higher lows. So you're looking for a break of structure. What you're looking for is a lower high and a lower low. So at this point, right, what I see, right, say this is the area of support. At this point, you've actually gotten a lower high, right? This portion over here is a lower high, and when price breaks below this area of support, you have this lower low, a lower high, lower low. So this tells you that, hey, this trend could be weakening, right? The trend could reverse, right? You really want to be careful down here. And in fact, right, this pretty much kind of sealed the deal, right, as Bitcoin, went to the lows of 6,000 over here. So this would be sort of a confirmation, right, where it's telling you that the trend on Bitcoin, right, is about to end when you get a lower low and a lower high against the existing uptrend. Okay, another example, right? So if you recall, right, crude oil, right, in 2015, 2014, had a very strong decline, right? I think declined to a lows of about, if you see over here, $20, $30. So again, can we apply this concept, right? A break of structure. So you can see that previously the decline, right, series of lower highs and lower lows. Right, simple market structure. But at this point, this is where things got interesting. Okay, this right now at this point, you have a higher low, and when the price breaks above here, you have a higher high because the price broke this prior resistance. Right now, you have a higher high. Let me just highlight to you, right, a higher high and a higher low. A higher high, this area over here, a higher high, and a higher low. Okay, so this again should give you a strong clue that, hey, this downtrend could possibly have come to an end, right? So you don't hear me using words like guarantee, is confirm, right? Bottom out or top out, right? There's no such thing as guarantee in trading or in technical analysis or whatsoever. If anyone promise you, guarantee, run far away. Okay, so this is why I like to use words like probably, likely, possibly, right? There is always this element of non-guaranteed behind it. So anyway, this is another example of the break of structure, and you can see that the price did eventually rally up higher from here. Okay, so the another technique that I want to share with you is what I call higher time frame structure, right? It's important to pay attention, right, where you are in terms of the big picture. So this is why you often hear traders say, hey, you should pay attention to what the higher time frame is doing, right? That is so-called the giving you the bird eyes view, right, of where you are in the big picture. So this is why, I want to share with you about the higher time frame structure. So let's look at the first example. Over here, right, you might wonder and look at this chart. Hey, Rayner, why did the price, come up here and then decline, right? What's so magical about this area? Okay, price apparently breaks above this swing high over here, and then it collapses lower. Right, so at this point, a lot of traders who are unaware, they buy the breakout only to get caught on the wrong side. Why is that, right? Again, I mentioned something called higher time frame structure. So let me point out to you. If you look at this chart over here, you can see that higher time frame, this is the daily time frame. What you've seen earlier is the 4-hour time frame. You see that over here on this higher time frame, this is where you have, previous support that could act as resistance. So the breakout that you've seen earlier is actually at this portion over here. You're buying the breakout into this previous support that could act as resistance, which is again, right, it's a low probability breakout because you're buying into a huge selling pressure, right? And it's pretty much no wonder why this market reversed from here. So this is what I mean by higher time frame structure, right? You want to pay attention to where the price is coming into, especially if it's coming to any higher time frame structure like support, resistance, trend line, channel, etc. Another example right over here, New Zealand yen on this 4-hour time frame. Okay, price come down lower, bounce, toing, toing, and boom, rally. Hey, what happened, man? What's going on? A clue, right? Higher time frame structure. And although I do agree that you have a series of higher lows and higher highs as the price breakout of this resistance as well, right? I do agree, right? But another thing that I want to share with you to look out for is higher time frame structure. So looking at the daily time frame, you can see that over here, I know there's quite a bit of lines over here, but what I want you to pay attention to is this portion. It came into a strong support on this daily time frame. In fact, I think it's even apparent on the weekly time frame. And if you draw a trend channel, it has this confluence of this trend channel as well. So again, no surprise, right, that hey, you could expect a bounce or even a reversal of this area on your chart, right? So this is what I mean by higher time frame structure. Okay, and the last tip that I want to share with you is pay attention to the 200 period moving average. So for those of you who have been following me a while now, you know that I tend to say that, if the price is above the 200 MA, right, try to stay long, right? And if the price is below the 200 MA, right, try to stay short. And the reason is quite simple, actually. If you think about this, right, the 200 period moving average, it summarizes the prices of the last 200 candles, right? So if the price right now is above the 200 MA, it's telling you that the price, right, has been trending higher. So that's why it's above the 200 MA. And if the price is below the 200 MA, it's telling you that the price, right, has been trending lower. All right, so this is a simple way to kind of, tell you what's the long-term trend, right, of the particular chart that you're trading. Notice that I use the word long-term trend of the particular chart of your trading because it could be the 200 MA on the 5 minutes time frame, and that isn't really a long-term trend because it's a 5 minutes time frame. Likewise, it can be a 200 MA on the daily time frame, and that's a pretty long time frame. So I would say it's the long-term trend of the chart that you're trading, depending on what time frame you're looking at. But anyway, right, let's have a look at the example. Right, this is the 200 MA on the daily time frame. So again, how do we apply this this technique? Again, at this point over here, the price is above the 200 MA. So I said, right, have a long bias. I didn't say buy. I said have a long bias. This means that you want to look for long opportunities. You want to look for opportunities to buy in this market condition. So from the looks of it, right, I would say this is an area of support. Okay, and every time, if price comes into an area of support, it forms a price rejection. That is a valid trading setup. And on top of it, right, you know that you're trading along together with the long-term trend, which is on the uptrend, right? So this might have been potential setups, right? This one as well. Okay, this one, price just sliced through it. There wasn't any price rejection or anything. So, there is, for me, there's no reason to be long. Okay, so now that the price has now, traded below the 200 MA, right? Now the price is below the 200 MA. Price is below it. So now, hey, I said, right, to have a short bias. So now you can look for opportunities to go short. So just again, simple market structure, you can look for at previous support and resistance, right? Like over here, right? Previous support that could act as resistance over here. Okay, similarly here, previous support acting as resistance. So now this is how you can actually use the 200 MA to give you a bias to know whether it should be long or short, and then just reference, right, to a market structure like support, resistance, or maybe moving average, right, to kind of identify the area of value that you want to trade from. Okay, so this is how 200 MA, right, could give you, or rather alert to you that, the trend might be about to reverse. Another example, shall we? Right, Aussie dollar against the Japanese yen. So again, this one, again, the price over here at this point, right, price is above the 200 MA, right? So again, you should have a long bias, right? So now the question is, do you have a long trading setup? Okay, so in this case, right, to me, there isn't, right, because there isn't any price rejection, right? Price just pretty much go through it. At this point now, the price is below the 200 MA. My bias is no from long to short. So again, ask myself, at what level on the chart do I want to trade? So as the price, hit lower, for example, no setup, this over here might be a possible setup. Okay, you can notice that there's this swing low, price break below it, comes up, gives you a price rejection before it continues lower. Came back up into this resistance now, hit lower. Came back up again for a third time, hit lower. Came back up, hit lower. On top of it, this one over here, you have the... Okay, this one is really significant, right? Because, number one, retested the 200 MA. Number two, into this area of resistance. Okay, and number three, you have this false break of this highs over here. Price, I think, did trigger above this highs. Okay, and then collapse, reverse, lower. Alright, so then again, price retest at 200 MA, come down lower. Did a pullback towards this previous swing low that could act as resistance and then continue lower. So you can see that if you reference the 200 MA for your buyers, right, you can see that chances are you're usually trading, on the right side of the trend. Of course, there are times where, this totally break down, especially if the market goes into a long-term range, right? Let's say a long-term range like this. 200 MA is pretty much like in the center, right? So yeah, at this point in time, right, you might get a chop up a little bit, but if you just use a little bit of common sense and see that the market is in a long-term range, right, you still can, adapt to it accordingly. So anyway, right, this 200 MA, it's useful again to help you identify the trend reversal and to help you trade on the right side of the trend. Okay, so good. So moving on, right, let's do a quick recap, right? I like to do this to make sure the concepts, right, and techniques goes into your head. First thing we spoke about, break of structure, right? I said that, in an uptrend, you have a series of higher highs and higher lows. So if you get a series of, or if you get a lower high and lower low, it's a sign to you that, hey, the uptrend could potentially, possibly, / could be reversing. Number two, I spoke about referencing it to the higher time frame structure. Where are you in the big picture? Are you coming into a long-term strong support, resistance, trendline channel, etc.? That is something that you want to be aware of as well. And the third thing we spoke about is how you can use the 200 MA, right, to, number one, identify trend reversal and to help you trade alongside the right side of the trend. I mean, that's a mouthful, right? To identify trend reversal and to trade with the trend. Okay, so with that said, right, I've come to the end of this video. If you want to learn more about what I do, right, you can go down to my website, tradingwithrayner.com, because my name is Rayner, tradingwithrayner.com. Alright, yeah, you scroll down a little bit, right? So today we spoke about, I would say, largely about price action. So if you want more knowledge on it, go down here and download this guide, the price action, the ultimate guide to price action trading. Click this blue button, I'll send it to your email for free. And if you want to learn more about trending markets, riding massive trends, go and download this ultimate trend following guide. Alright, again, you can click this blue button and I'll send it to your email for free. Alright, so with that said, I've come towards the end of this video. If you enjoyed it, you like it, smash that like button, subscribe to my YouTube channel. Any questions, leave it below and I'll get back to you. So with that said, I wish you good luck and good trading and I'll talk to you soon.